All right, welcome to Coffee with Marcus and Mark, the number one stock market show on Spotify and one of the most popular market updates on YouTube. As you can see, we are back from Cancun. We're back in our studios, and we'll talk about what's happening in the markets and how we are trading it. Today is Monday, March 13, and geez, I don't even know where to start. Markets are in turmoil. Silicon Valley Bank collapsed, causing a sell-off in the banking sector. The Treasury yields are plunging on par with the 2008 crisis. Over the weekend, U.S. authorities stepped in to bail out SIVB Bank, while investors are keeping an eye on banks this week and also CPI data. So, wow, there's a lot going on. We'll show you what we are doing and how we are trading these markets. By the way, if this is your first time here, I'm Markus Heitkoetter. This super smart guy over there is my head coach, Markus. We're all traders who trade live accounts, so therefore we got a lot of trading experience. We're showing you how we trade these crazy markets. So trust me, we know our stuff and we're not afraid to tell you like it is. So if you're here looking for some honest insights into the fascinating world of trading, you are in the right place. And wow, what a weekend. What a Friday. What a weekend, Mark. Let's really start on Friday and then unpack what's happening here.
Sure. So, I mean, just a wild, wild way to end the week. And go figure, Marcus, we're traveling. We don't do a coffee with Marcus and Mark, but we were taking a look at things, and it all had to do with fears in the banking industry, specifically tied to Silicon Valley Bank, and what ended up being a bank run.
Yeah, so I mean, this were on Thursday. SIVB, Silicon Valley Bank, basically said, we're in some trouble. Then everybody wanted to have their money out of the bank. On Friday, the bank basically closed its doors, got taken over by the FDIC. And this then really had kind of the whole banking sector a little bit collapse. I mean, even if you look at the larger banks, Bank of America here, Citibank, I mean, they are massively down. And then if you look at some local banks like PNC, one of the positions that we are in, like Firm, we'll talk about this here in a moment. But this is where, I mean, that came out of the blue because everything over the past few weeks were all about interest rates, inflation, and then, well, kind of out of the left field, a banking crisis?
Yeah, and that's the thing with the focus on the Fed and interest rates rising. At one point, it looked like a 50 basis point hike in March was pretty much locked in and guaranteed by the Fed, and that had some investors concerned about banks in general, wondering if the Fed's aggressive hiking will continue and if that could hurt the economy. And then there was talks about a recession and how that will impact banks and if you have defaults on loans and whatnot. So we started to see a little movement in the financial sector before all of this, but then when you had a bank just basically stop, the shares are halted. There's a bank run, and they're just trying to find a buyer. They eventually found a buyer on Sunday, I believe. HSBC stepped in and purchased the bank, but it happened so fast, so quickly that traders, I think, were fearful. Like really, it was reminiscent of uh, the housing crisis, the financial crisis, and Bear Stearns and whatnot. So it seems a little bit overdone, Marcus, but at the same time, the shock waves and who's involved is still kind of sifting out.
Yeah, and this is where we just talked about it. Interest rates. I mean, look at how much they plunged. The 2-year yield last week trading well above 5, now getting ready to trade below 4. And I mean, this is the largest drop that we had since the banking crisis.
Yeah, and if you think about it, so bonds and yields are inverse of one another. So if bonds are going down, yields are going up. If bonds are going up, yields are going down. Well, why would bonds go up if people are buying bonds? And so this is where you had this flight to safety, right? So bonds were rallying, the yields were going down, even gold moving higher with traders getting into that more, flight to safety type asset.
Yeah, and this is where I mean, cash is king, not when you have it at a bank that collapses, right? So this is why right now, I mean, traders and investors are putting money into, as I said, the bonds, and the inverse relationship here. This is why yields are plummeting. Also, looking at gold, I thought I had gold here. Let me just bring it up. GC, is it GC1? Right, there we
Yeah.
go. So gold also, I mean, it looks harmless, but that's a quite significant move for gold that happened since last Friday. I mean, we're talking about an almost 6% move in gold. For gold, that's huge.
Yeah, yeah, absolutely. I mean, just look at those bars. Not quite up to the highs that we had at the peak there in end of January, early February, but that's a real nice move in gold back above 1900.
Right. And so this is where right now the Fed is kind of in a predicament because the collapse of SIVB Bank was, I mean, in part can be attributed to high interest rates, right? Because this is where, I mean, banks love to use adjustable interest rates, right? Variable interest rates. And as they go higher, now suddenly some companies might not be able to pay these and default on loans, same as consumers, right? And that is one of the fears, as you said, that has already hit the banking sector. Because if you look at the bigger banks like JP Morgan, we have seen that they already started moving a little bit lower, or Bank of America, right? I mean, even before we had this collapse last week. And this is where now, okay, what's the Fed gonna do? So as of right now, I mean, everything has changed. We talked about a rate hike of 50 basis points. Well, that's off the table right now. This is what traders are factoring in. That is, on the right-hand side, a 0.25% move, or that the Fed will not do anything at all.
What a difference a day makes. I mean, this is really really interesting. It just shows that there's so much uncertainty right now, going from pretty much up until the beginning of last week. A quarter point was pretty much priced in a guarantee, and then last week it was a 50 basis point hike. I still think that quarter point is going to be what the Fed is targeting, but you never know. You never know how they handle this banking concern. But I think that CPI data and PPI data is really what they need to take a look at now, and that's coming out this week.
Right. But look at this of what we are seeing right now. It seems that traders are factoring in the Fed is done raising interest rates. They do one more quarter point, and then they need to lower interest rates to avoid a banking crisis, a financial crisis here. That's what traders are thinking right now. So on the one hand, we still have inflation. And as I said, the Fed already said we have to pay close attention to the core CPI as well as the PPI. So, I mean, both CPI and PPI tomorrow and on Wednesday. So, if this keeps moving higher and the Fed cannot raise interest rates, well, what to do then?
Yeah, but that's the thing, Marcus, and this is where so the Fed has a dual mandate: price stability and maximum employment, right? This is where long term their target for inflation is 2%, and they'd like to have unemployment being low. Right now, with inflation getting well above that 2%, their policy, right? It's a Fed policy meeting. Their policy is to tackle inflation, maybe at the sacrifice of rising unemployment, in order to bring inflation down. Now, with this banking crisis, and again, it could be that it's a little overdone. It might not be systematic risk right now, like the market's kind of pricing in, thinking that, hey, this is just one or two banks and it's going to get worse. It could be that it's a little more isolated and this is just fear and panic right now. But the Fed focusing on the banking industry, I mean, that's where I think the government has a bigger role than the Fed, and why I believe that the Fed will still raise a quarter point.
Yeah. No, I believe, but what about then? Will they still keep raising? Because as of last week, we traders thought that we might even scratch 6%, and now it seems that we barely get up to 5% as a terminal rate.
And that's the thing. This is why I think CPI and PPI is so important this week, because I think that even this decline is premature right now because we don't have all the data that the Fed would focus on, and so it's going to be an interesting week. And then that Fed meeting wrapping up on March 22nd,
Yeah.
there could be some fireworks.
And that's already next week. So it's already next Wednesday. It's definitely
That is
coming up.
February 22nd. Either way, it's next week.
Yeah, it is next week. It is next Wednesday. So yeah, and the interesting thing is also the CPI data. This is the data from last month. What's
Sure.
happening? in the banking industry, in the finance world right now. I mean, that's what's happening now, and this is where, yeah, it will be interesting. And this is where we saw this morning the VIX, the fear gauge, just shooting higher this morning above 30 because there is so much uncertainty. Okay, what are we going to do right now? Do we have a financial crisis? Do we have a banking crisis? Was this an isolated incident? Then we hear from another bank this morning. So it's a little bit all over the place. And then we have the CPI data. So I mean, massively up. And if you look at the futures in overnight trading, I mean, all over the place.
Yeah. Yeah. I mean, volatility has definitely entered the building. Uh, gosh. I mean, that's what we like to see for option premium. It was definitely an interesting morning, and we'll see where the dust settles. But I mean, you can't argue that there's that volatility is there. The VIX shows it, option premium shows it. What we could sell puts for this morning shows it, and I don't think that's going to change much this week.
Yeah, and we will look at our existing positions here in just a moment, but we also see right now in the markets, when you blink, you move it. I mean, going from negative, a percent negative to right now, a percent positive. I mean, they're just huge moves right now. And news are coming out almost every hour regarding these banks and what's happening there. So, yeah, but I mean, as I said, we are having fun with our positions. So let's go through these at our positions. And first up here, CTRA. And CTRA, super interesting. This morning, finishing below 24 or opening below 24. Right now, trading at 24.85. You are out of the position. I'm still in it. They will pay a dividend on Wednesday, or not paying it, but it's the ex-dividend date. So payment is usually a couple of weeks later. But if I still have these shares on Wednesday, I'll be entitled to the premium, which is probably around 57, 59 cents, somewhere around there. I think we'll know more exactly on Wednesday. And this morning, I mean, there is the 20 strike price available. And initially, you were interested in selling more puts and maybe getting back into the game here.
I was, and this is where CTRA has a lot of natural gas exposure, but also is very correlated to the movement in crude oil. So crude oil was down huge. It's reversed. Natural gas is positive for the day, but I was, yeah, you could look at crude oil, a huge reversal, getting down to 72.50 a barrel, and now at almost 76.
Yeah.
So oil and gas plays popping up on the PowerX wheel scanner left and right. There was Oxy, there was Devon, there was CTRA, there was Exxon, there was Chevron, Apache. Take your pick. And what I did is I was looking at CTRA, originally trying to sell the 22 puts that had a huge premium, and I missed the boat here. I was trying for the 22, then the 22.50. There was great premium there. The 23 stayed available for some time. It might still be available now, but
Yeah.
I decided instead shift my focus to Oxy.
Right. So Oxy, we've been trading it over the past few weeks, and this morning there was just a great opportunity in Oxy to sell the 55 put.
Yep. So I decided to do that just rather than doing both because of the economic calendar this week. I wanted to pick one and see if there is a little more volatility that comes either tomorrow or the next day.
Yeah. So the 56 is still available. I also sold the 55. Let's go over to the calculator. You got 35 cents for it. So you're
Yep.
looking at 46% annualized. And I got actually 38%, 38 cents for it. So 50% annualized. Liking this. I'm liking this. So I think this great trade. And right now, since Oxy has been also reversing, so trading at highs of the day right now, so this position is in a very good shape. Same as CTRA. I'm happy with my CTRA.
Yeah.
So that was a new one that we entered. And then we're going to talk about Google for just a moment. So Google also up here this morning, 1.4%. This is where on Friday I sold the 87 put as part of my rescue mission plan that I have here for Google. We've been talking about this previously. I'm assigned at 108. You got out of this one because you got assigned at a lower price. You were able to get out at this higher push. So I'm still in it. My break even at 103.46, and I'm planning to bring down my break even. So if I'm getting assigned, my break even will be below 100, and I like that a lot. Actually, it will. My cost basis will be below 100. My break even probably at around 96. So that's why I'm doing it here. And this also is working out great. It's still available this morning if you want to do this. But I liked it on Friday. How much did I get on Friday? Let me just double check. Friday, I got 70 cents, which was good.
Nice.
All right. PNC. Let's talk about PNC. Wow.
Oh no, the sky's
Oh
falling.
no, sky is falling. We trade
You
PNC
know,
because we were looking at the chart, and this looked really, really like a solid chart that had some support at 147. I sold the 147. You sold the 146.
yeah, yeah.
Didn't matter.
No, no. I mean, I like the 146 a little bit better support wise. But this is where a company that has or a bank that has good fundamentals, chart, love the chart, and there was a bit of a reaction because the concern goes to regional banks, right? If Silicon Valley Bank has failed, do the regional banks have concerns, and so they're seeing some tight scrutiny. But even the big banks, Bank of America, J.P. Morgan, they're getting hit too. So there's just a little bit of worry and concern here overall. But PNC, it was Citi that upgraded PNC from hold to buy after the dip, saying that they are in a good position and that they should be able to weather the storm here, and that it's a good price for buying. And it could be a little bit of an overreaction. All things considered, we're down at 11% right now. And this, of course, I just love it when the wheel trades, you get a sign and it stays put, and you're able to just like put a ATM in your front yard, collect cash week after week with calls. But being down 11% is not outside of the norm, right? So it's at a reasonable level, even though we can't sell calls right now.
Right. But what we did is, I mean, when we saw this drop on Friday, I was looking at it and I bought some more shares at 136, therefore bringing down my cost basis to 141.50. So that was here when I saw this. I got assigned on Friday at 147, sold some more, bought some shares at 136 on Friday when we already saw this, because I thought that we were done with this reaction. And you did the same this morning.
Yeah.
You bought some more shares at 126, bringing down your cost basis to 136, which is a fantastic position to be in.
Exactly. And so I could definitely sell calls at 136 right now, but I'm holding off. I do think that just like we're seeing right now, we're getting a reversal for the day. I believe that this is an overreaction.
Yeah. And I mean, you just mentioned it. Even for me, by bringing down my cost basis to 141.50, by doing so right now, I could sell the 142 and I would get 38% annualized, probably more because that's based on the bid price of 75 cents. I might
Yep.
be able to get, what would you say here, maybe 90 cents. So I could sell them for 46%. So we're in a really, really, really good position here by buying more shares. But at this point, you're right. I mean, we are trading right now at highs of the day. Huge, huge reversal, because if we look at this of what happened here, I mean, on Friday, from the low to the high, this is a 6% move, 7% move. And if you're looking at today, that is also from the low to where we are right now, a 6.5% move. So there's a lot of volatility. And I mean, if we see that this was an overreaction and we're snapping back, this will be probably a really, really nice stock to trade with the wheel
Yeah.
strategy. So liking this.
Agreed.
And again, volatility is not over yet, because tomorrow morning before the markets open, we have CPI. I mean, for today, the focus is all on banking. Tomorrow, it will be back on inflation and interest rates. And what will the Fed do? And this table might change dramatically tomorrow. So we'll
That's a
see.
crazy looking table.
It is a
That's
crazy looking
wow.
table.
Wow.
Yeah. But also looking at the S&P, I mean, if you look at the Dow right now, we are trading at highs of the day. S&P 500 trading as highs of the day. NASDAQ up and away here. But also in the S&P, I mean, just keeping an eye on this because right now we are well below the 50-day moving average and the 200-day moving average. So now the question is, will we slice right through on the way up, or will either of these moving averages act as resistance?
We'll wait and see.
Yeah. Anyhow, so if you found this helpful, do us a favor and give us a like and maybe subscribe to the channel. And we have some more videos for you that explain how we trade these crazy markets. Check it out and then tune in again tomorrow when we talk about the CPI and how this is rocking the markets.
Happy trading, everybody.